What happens if you file a long-term disability claim and you're denied? You ever thought about that? Because a lot of people do file long-term disability claims and they do get denied. And the insurance company is going to grind you down and grind you down and grind you down, where you ultimately will just settle for a smaller lump sum than you might have got otherwise, and that's not what we want to happen. So we're going to bring back Skip to talk about the process of long-term disability denial letter and what to do next, because it's important. If this is something you're looking at, well, you got to know the process. And the insurance company, I guarantee you, they know the process. Because they do it all the time. So we want to give you some education so you know it as well. As always, if you like what you see here, my friends, don't forget to subscribe down below. Comments. We'd love to hear comments. If you've gone through something like this in the past, what was your experience? What's your recollection? Did it work out? I mean, anything. And again, we're not here to bash insurance companies. That's not what I'm trying to say. I worked for one for 10 years. I got no fault with insurance. I do have fault when people are trying to get their benefits that are rightly theirs, because I know for a fact on long-term care insurance in particularly, some firms are they guard their money like Fort Knox, even though it's when the client needs it the most, because they need the long-term care assistance, and the insurance company is putting all these roadblocks there to get them the money that they paid for. And yet when you send the check to the insurance company, they took that without any blinking an eye. So it's just odd how it works always in one direction, it seems. So Skip, take it over if you would.
Okay.
Thanks.
I'm Skip Ritchie. I'm a practicing attorney. I'm licensed in 3 states. I'm going to talk specifically about long-term disability. And like we said at the beginning, this is about a long-term disability policy where you are sick, you've been injured, and you can't work at your job, and you realize I need to do an application for short-term disability maybe at the beginning, and then the 90 days runs out, and then you got to do a long-term disability application. You file it, and then all of a sudden you are denied, and you get a letter. Like, for example, I've got a letter here from a big insurance company that's doing a denial letter saying the person doesn't meet the definition in the policy. So what we're going to say to you today is, we do want your comments, because here's what I realize in this whole business of trying to help people who've been denied. They don't really know what even the name of their insurance company sometimes. Not that they're not smart in so many categories, but they pay for it every month. They see it maybe on their pay stub, LTD, but they don't know the name. They never read the language. They don't even know what they have. They don't even know what the definitions are. So those who have read your employee handbook and know the definitions, you know, my hats go off to you. You're way above the curve, because most people don't. They're busy working hard for their family, and they're not even thinking and hoping for any kind of injury or illness. But the reality is the statistics are there. In my experience over 20 years, a lot of people have serious accidents and have the need to use their long-term disability plan. So what happens first? Okay, so you're any age, you're working for somebody, either you're having your money taken out of your employment in terms of your salary, and it's buying a plan that the employer has picked for you normally, or it's something you've bought privately on your own, like, for example, Northwestern. I used to have Northwestern long-term disability. For the most part, I got great customer service, and I really like Northwestern, and they're a solid company. As far as I know, they are less of a denial company than others in terms of they pay out when the evidence is there. So for example, let me talk to you about 2 different kinds real quick. These fancy words that are confusing even to me, ERISA and non-ERISA. Non-ERISA basically is you go to Northwestern, you work at a construction company, it's small, they don't offer it, you want to get it because you know, man, if I get injured and it's not workers' comp, say I'm on my way home and a deer runs out in front of me and I crash my truck, and then all of a sudden I'm injured and I need long-term disability, it's only your private plan that's going to kick in because your employer never bought it for you, right? So that would be a non-ERISA plan. That's usually a lot easier to help people, and sometimes that pays, you never need a lawyer. Where you would need a lawyer in the non-ERISA is eventually they say, we don't want to pay you for life. We want to do like we talked in our last video. We send you a letter saying, hey, can we talk about lump summing your total amount we owe you into a lesser amount so that we can have you off the books. The insurance company say that. But we like that because that's an opportunity if the money is the right number and you talk to an attorney and negotiate the highest number possible. That number gives a financial planner, a certified financial planner like Josh or anyone else that it specializes in guidance and counsel, the opportunity to help someone think through and plan, okay, what do I do with that lump sum in a way that I preserve it to provide for myself and my family the rest of your days, because that's all you get. Once you settle, the key word is final settlement. There's no more money coming in, because once you settle a lump sum, it's over. So I want to talk to you real quickly. So you get a letter from the insurance company, you're really sick after that 90-day period, and it says, we read our definition, and we've read your medical evidence, and we say your medical evidence doesn't prove you're disabled according to our definition. At that point, you can hire an attorney. You can hire me or any other long-term disability attorney who specializes in getting approvals. So at that point, there's a certain kind of guidance that's given in the plan about the appeal process. And usually it's a letter to the administrator that handles the claims that's going to review a combination of your medical evidence and your insurance language, plus your vocational background, like what kind of work you've done, what did the doctor say you can do and not do. So basically, there'll be an appeal department, and sometimes it'll be a different insurance company or a name than who you're working for, and it'll be they call it a third-party administrator. So they'll get the paperwork, and a lot of them are based out of Lexington, Kentucky, and that you'll say to whom it may concern, and you'll write this 15-page plus letter saying, we've read the definition, we've read the medical evidence, we believe based on the information in the file, from the claims file, and the things that have been provided to you from the doctors, that you do meet the definition. And maybe there's a little summary of the claims history, and you want to talk about kind of the fact that sometimes there's a couple denial processes and before you go to court. So then you kind of lay out, you followed the claims process, and that's a big thing. Once you've been denied, a lawyer can help you. You might do it on your own, but at the final denial, if you don't have a lawyer, it goes to court, and there's where you're in trouble, because you can't come to a lawyer last minute and expect a 15-page letter written with all the medical evidence if you don't have all the information together and be able to hand it, and the lawyer doesn't have time. So my recommendation is don't waste to the last minute. And then basically you go through. And sometimes the gist of a denial letter is they will attack you with saying there's no objective evidence. And that means, is there an x-ray showing a fracture or degenerative changes? Is there an MRI showing a torn meniscus? Is there, or disc damage? Is there soft tissue or connective tissue damage? That's what MRI will show. A CT scan, which will show bone. Is there an EMG, which is where they hook the electrodes to the neck and to the arm? And is there problems, signals going through showing that the nerves aren't functioning correctly? Is there a sonogram? Is there a biopsy? There's all these objective tests that show that you have objective problems. Now, you don't have to have only objective. You can have a combination of objective and subjective. But the way that the insurance company typically attacks you, which says, hey, we're denying you, person, because there isn't enough objective evidence. You're saying you're in pain, but we don't see anything that we can see on an x-ray or a test. And that's your opportunity to go back to your doctor and get that stuff. Because if you're hurting, there's something objective going on. It's just a matter of getting a good doctor and making sure they do the right tests and document it. And then the final thing is, and with this denial letter, is where kind of, and if we win your denial stage, you basically will get your benefits. So you'd say, okay, what was I fighting for? Well, when I got denied, they promised me, paid me $2,000 a month. For 3 or 4 months while they denied me, I didn't get my $2,000 a month, and Skip or another lawyer wrote me a letter, and I got my benefits, and reinstated 3 months later after they were denied. They owe you $6,000. And so what we typically do a flat fee. We don't usually do a contingency. And then if they get your benefits flowing, they'll keep coming and coming and coming, but they'll audit your case again and they'll cut you off again. Then that's another denial. So you have to be ready to call an attorney, write a letter, win it again. And eventually they might say, well, after 24 months, there's a new definition. That's big for them. That's their way where they can kick you to the curb, because when that definition changes, and I won't know it unless I read your policy, and there can be a bunch of different definitions, but usually the word starts drifting to mean total disability of all jobs. But some plans don't. Some plans just say you can't do your job you were doing when you were injured. If you can't do it at 24 months, then you're still going to get your payments. That's a good disability plan. That's what Northwestern sold, and the one I had. So as long as I couldn't be a lawyer, I was going to get payments after 24 months. But most policies are cheapo policies, and they say if you can't do any job, then we'll pay you. Or we'll pay you 60% if you can't do any job. So they've basically sold you long-term disability But I would say as a lawyer, long-term means 24 months, and then you're getting kicked to the curb unless you hired a lawyer to prove that you can't do any gainful activity. And that's hard to do because most conditions you can do some things, but you can't work full-time. But their definition is basically if you can't work, if you can work part-time, you aren't eligible for the money. And sadly, you know, how much money can you make part-time? How much can you make when you're really sick, calling in sick 4 or 5 times a month? The bottom line is you are disabled, and when it comes to competitive work, no employer is going to work with you and miss that much work for very long. So the big thing is we need to know what that 24-month new definition is, and then ultimately is get the process going, get the money flowing monthly, and then at some point they would call you or come to you with, like we talked last video, with an offer of lump sum. Say you're 45 years old, and they're like, wow, if we have to pay for every month for the next 20 years, that's so much money out of our pocket. We don't like to have this hurt person employee on our books. Let's offer him $150. And you might say that's a lot of money. Well, that lump sum, if you take it, that's it. The case is over. That's all you're going to get. And you're usually entitled to more than that. And what does a lawyer do? We negotiate that and put pressure on them and say, look, you're going to try to deny them and irritate them and scare them and wear them down so that they either give up or take less money. Well, we're going to fight for them, and we're going to help you get more money, hopefully. And there's no guarantee, but normally that's what the process works out to be. If you're truly hurt and we can get the evidence, then they're going to say, wow, we're going to have to pay more. And so say we get the offer, like in the last video, to so you'll get $270,000 in your pocket. It's not a big deal because whatever you paid us still yielded you a lot more money. And then when you settle, or before you settle, you can talk to someone who's a certified financial planner to say, okay, I have a house, I have a car, I have this in savings, and I'm going to get this lump sum. How can I make this work so that it's there for me in the future? And that's where the last piece, the lump sum planning session, which would be with a certified financial planner, not to invest your money so much, but to guide you and counsel you on your different options and basically in your different goals on keeping the money there for you so you have it when you need it. And it's important because healthcare is going up. If you don't have insurance, it could all be gone in one event. I had one client of mine have a heart attack. The bill for the heart attack and all the procedures was 50 grand. So if he had a 150 grand settlement and he had no insurance, within a week or two of settling, he already had 1/3 gone out of his money he had to make last for his entire life. Now here's the last thing, a sad point, but it's the reality. We all are going to die at some point. So when we have this money, we're trying to make it last to take care of ourselves and our family. Now, the biggest thing is, if you have a long-term disability plan and you're getting, say, $2,000 a month, you're like, this is wonderful. I'm going to get it to the day I die at 65. Well, sometimes people don't make it to 65. But if you lump sum it and settle, which you can't force them sometimes to do lump sum, but if you can get them and the number is right, and you meet with a certified financial planner, once you settle, it's under your control. It's yours to do what you want. And if you die, it goes to somebody like your wife or your kids. It stays in the family, and it can use a handicapped child. It can be used to help someone who really needs help, who's vulnerable. So it's good for you to have control. And I think that's a big thing, is that you're going to do the best with your money with good education and good counsel. You're going to do the best with your money than the insurance company, Uncle Sam, anyone else. They're not going to think and care about the people in your family like you are. So that's my last note for you there, Josh.
Yeah. Oh, absolutely. No one cares about your money more than you. That's just a fact. And that's why I say to clients all the time, you are responsible for your money. No one cares more about it. No one cares more about it. No one cares more about it. Skip can care. I can care. Your bank can care. They don't care about your money like you do. So it's incumbent on you to understand what is going on, especially with these kind of things here. Because, again, if you screwed up the first time, there's no do-over. And that's what I say about retirement planning, generally speaking, is that you don't get a do-over for retirement planning. There are some times you get a do-over for Social Security, by the way, but we'll talk about that in a different video. All right, so as always, comments help because a lot of people like to we learn from comments. I'll tell you that right now. So comments always help. Thumbs up always help. Did you have? Yeah, absolutely.
I want to do something. I haven't done a tremendous amount of long-term disability, but in my short little tenure, I've learned out who's nasty and who's not. Like Santa Claus time. So so what I'm challenging you guys to do is to comment, look on your pay stub. You might just see the word or the letters LTD. You need to go one step farther. Who in the world do you have? Do you have Aetna? Do you have Unum? Do you have Prudential? Do you have MetLife? There's a lot of big players. Comment that. hey, I'm Fred from Idaho. I've got Northwestern. And in a lot of ways, that helps me think, well, Fred, you're going to be probably pretty good because Northwestern's a good company. But I'm curious to see in the audience out there who they have, because I can tell you I've had some really bad experiences with Unum, and I'd like to know how many of you have Unum. And then we can start calling, because I would say in that instance, you got to be up your game a little bit and be ready, because it's not going to be an easy process for you. And I would say in some instances, you don't even need to wait. Once you get that denial letter, it's straight for a lawyer. So here's what you want to hear and read. This is the goal that I got in a letter right in front of me. One of our clients that I work with, another lawyer in Florida that we team up with. Upon review of the appeal request from your client, we have overturned the denial of long-term disability claim. We've approved your client's benefits effective such and such date through the current, which basically says we cut you off, we were using economic pressure, and we didn't pay you for a long time. Now we're going to pay you up to date. Key phrase, current. All right? So when's the next denial coming? When's the next stressor coming? Well, what's insurance in the business of?
Protecting.
Yeah. So it's not about if. It's about what? When.
Yeah. But I mean, when.
Yeah, when's the next denial coming?
Because they can denial.
Multiple times.
They can.
Yeah, because they're basically saying you don't meet the definition anymore. You improved. And some people do improve.
Wait, so even though this guy got the thing, they can come back 2 years later?
So a couple months later, his health is doing better. They get the records. They can see, oh, man, he's playing golf and tennis, and he's running 20 miles a day. And, you're not disabled anymore. Sometimes I got to let you guys know and gals know, if you're working full-time or you're doing full-time activities, don't keep taking your check, because at the end of the day, if they can prove that you were disabled, sometimes there's payback. In Social Security, there's payback. It's questionable with long-term. That's not my specialty. But if you're healthy, you're not disabled. That's the basic. Yeah. And I had a family member who, he didn't quite understand it. I mean, he didn't have a lot of education. He was a truck driver, and he went back to work. He had cancer. He went back to work. So he was excited to get back on the road, but he kept getting his check. And he kept depositing his check, and not that he was trying to rip anyone off, but he's thinking, I'm not working full time. But the problem is, he was making $2,000 a week, and most definitions of work are more than $2,000 a week is good time work, and that was roughly 3 to 4 days a week. So he was in the gray area, and then all of a sudden he owed Social Security in that instance 40-some grand back. Ooh. And then you got to create a payment plan. But this video is about the initial denial. Right. They want to deny you. You want to improve, but as soon as you improve, you are going to get a letter saying you're denied again because you've improved. You don't meet the definition. Right. And if you want to keep your benefits and you disagree that you have improved to the point of the definition, then you need to get a lawyer to write this 15-page letter here that I got in front of me to say, no. If you read the records carefully, you look at the objective testing and the signs and symptoms, all that together, plus their work history and what they need to do for their job requirements, they don't meet the definition. You need that so you keep the ball in the air and you keep getting monthly benefit. Now, if you heal and go back to work, great.
Right.
But if you don't, you're making steps to protect yourself, and in the end goal, you're ready to possibly receive a lump sum so that you can go to a planner and make it work. Because as you get older, your health just doesn't rebound like it used to. And so in the end, you'll be at that teetering point where you're just not going to heal up to 100%. And so the question is, how do you manage and plan for retirement?
Yep. Right on. Good stuff, Skip. As always, we appreciate it. So don't forget to subscribe, comments, and we'll see you next time. Thanks, guys.